bring up our first one, Bikaji Foods International. That's the one on our radar. The company scheduled a board meet on the 23rd of August. That's this Friday to consider an acquisition. So to discuss this and more and their growth plans, we do have with us Manoj Verma, who's the Chief Operating Officer, joining in now. Thanks a lot, Manoj, for joining in. 23rd is the board meet and it is to consider an acquisition. We're just trying to understand what exactly are you looking to acquire? It's the size, target, geography, if you can give us some sense.
I think let's wait for this meeting to happen and get things through. But this is not about geography. This is about getting into categories or expansion into categories. That's what we're working on.
So what categories are we talking here? And I'm not specifically asking for the name, largely because the board meeting has still not happened. So what we're trying to understand is perhaps the size of the acquisition. Will it be a partial investment? Will it be a full acquisition itself? And is it, what category? Is it similar to yours? Is it ancillary? Is it sweets? Is it liquids? If you could give us some broad sense.
So it's like we already are in it. And in fact, in the past, we've been talking about it to making our footprint stronger in the QSR or frozen stuff. So this would be like of the same.
Is that a listed company?
No, that will not be a listed company, and we'll be taking high stakes in this stuff. So it will not be a full acquisition as well.
Manoj, good morning. Thank you for joining in. We'll get to the business aspects of things right now. How has demand been so far in the quarter gone by, in the current quarter actually, and what is the volume and revenue growth target that you're projecting for FY25? You had earlier projected a 13 to 15% volume growth and a 2 to 4% price growth guidance. What's the current trajectory looking like as the quarter has gone by so far?
I think it looks like that what we said and what we have planned for ourselves, we certainly should now be on track on this stuff. That's what it is. We're already into the festive mode, and I see quite an excitement around when we speak to our channel partners, when we speak to trade in the market. I mean, I see quite a positivity. Good in last couple of quarters is that now the rural demand, which is now picking up, in fact, it is ahead of the urban demand. That's where it is. So things are looking pretty bright at this point in time.
All right, things are looking pretty bright. Do you want to up your guidance that you've given to 13 to 15% volume growth with 3 to 4% price growth? Can you outdo that?
See, we're talking of the full year number. So that's where we certainly should be there. I know if thing goes well, if let's say category grows even faster. So I think this numbers should also be indexed to that.
And your margins, you were expecting at least 0.5% improvement. Do you think you can do better than that as well?
See, eventually, yes, that's a journey, and which is what we have said, let's say by 50 basis point year on year, we would want to increase on the bottom line. And that's what teams are working on. So across vectors, that work is on. And this is what we certainly will do. More importantly, we are not just only focusing on the bottom line. Our task is also to get the volume growth in place. So that's where we are.
What about utilizations, Manoj? Current utilization being around 40 to 45%. Has that number gone up? What is it that you're targeting in terms of peak utilization, and how much are you expecting your new plant also to contribute to your incremental revenues going forward? So
the capacity is what we have built for ourselves. This certainly is ahead of times, and that's where we are at about 44%, 45% kind of utilization. The kind of volume growth we are talking of, so if we continue to deliver that stuff, so in say 3 years time, we should be about 70% plus kind of a utilization. And once we cross a threshold of say 80% or close to 80%, then would be the time we would look at for the expansion or so. So that's what is the plan.
All right. So far you have capacity on ground. Just wanted your targets on your direct reach as well, because you've increased it from a little over 1.6 lakh outlets to about 2.7 lakh outlets in June. Where does that number go by the end of this year, and what are your target market shares in both core and non-core markets?
So this year our intent was that we should reach to 300,000 outlets directly. We started the year at that point in time we were at 2.5 lakh outlets. That's the target for the year. I think we will certainly surpass this number. That's the kind of work which is on. And eventually it will give us increased indirect reach as well, which perhaps will not be fair to quantify, but certainly from 1.1 million outlets, what we are today, this needle will also move up.
One final question from my end, Manoj. What is the current status of the cash or the debt that you have on your books, and how is that likely to change once this acquisition that you are planning to announce on Friday, how is that going to change your balance sheet structure as well?
See, it's not a very big acquisition, that's one. Second thing is that ours is a cash generating business, and we also have, good cash on our books. So I think this debt would not be an issue in this case.
What is the cash?
So we have in our balance sheet, if you look at, so we have enough and more cash on our books. It's close to about 200 crores. That's what is sitting there.
All right, thank you. 200 crores of cash and roughly 250 crores that you generate every year as well. So that should hold you in good stead. Good luck with that acquisition. We'll obviously touch base once you've made an announcement to the exchanges after your board meet on August 23rd itself. Always a pleasure speaking with you. With that, let's move on. Let's talk about a special segment for